100% win rate. Is it possible to achieve when selling options? And maybe yes and no. And I just want to explain it. And I think this video is worth making because a lot of people who watch me do think that get the feeling that you can just never lose. And the reality is, you will always be thrown off by a loss or two here and there. Now, it just matters how you take that loss. Now, you can definitely have years where you don't lose. So you can have a full year, maybe even 2 or 3 years in a row where you don't lose. But here are a few things that kind of help, or that I learned through the years. And I've traded, it's been 10 years now, but with quite a bit of capital. I've been trading since 2019. So I went through COVID, and I went through the Russia-Ukraine conflict and everything. And I trade commodities mostly, or only commodities, or options on commodities. So I have a pretty good understanding of how to drastically improve your win rates while keeping the returns pretty high. So it is possible, like I said, to have multiple years with no losses. However, taking a loss is inevitable. It will happen. Now, 2025 so far this year, I had no losses so far. I'm trading with about $8 million in total, and I do have all my trades here, and I think I should have somewhere my broker statement shows that I don't have any losses this year so far, even though this year was pretty crazy with Trump and the tariffs. I've had 0 losses this year, and I haven't rolled any positions. All of them were just closed as is for profit. So this was 2025, and this is the year that I would consider myself the most educated, risk-averse, and I'm at my best that I've ever been in terms of my knowledge and experience and execution skills. So it's definitely, you have to get to this point. But again, I'm going to have a loss eventually. It will happen. But it's just very, very unlikely based on how I'm trading. I'll tell you exactly what are my keys to get to this point. Now, 2024, I had one loss. It was a ZW trade, and obviously with the set of skills that I have right now, or the knowledge, this loss could have been easily not avoided, but contained and being way smaller. It wasn't a big loss, but it could have been a fraction of it, where I just basically just lose a little bit plus fees, and no big deal. Now, 2023, I had 2 losses. I had a loss on gold with what happened on October 7th. I had a position on gold and on LE. My position on LE, the loss was purely because I was not fully knowledgeable about the product. And there was a pretty big report that I wasn't aware of. And it came out, and obviously the price kind of went crazy. So this is something I've learned about. From that point, I need to know absolutely everything about the products I trade, from the smallest to the biggest report. And any report matters, and you have to understand what's going on, what are the expectations for this report, so on and so forth. For gold, this was an unexpected event. It was October 7th. You cannot really expect anything, really. You cannot prevent it. You cannot do anything with it, right? It just kind of happened. It happened over the weekend. I had a position on gold. The loss on the position wasn't big because the price was going really, it was falling down on gold. And then what happened on October 7th lifted the price. So I was like almost delta neutral when I got out, but volatility was so high, which obviously I took a loss. It wasn't a big loss, but a loss. So this is an okay loss that you cannot avoid. These are the losses that I'm fine taking. The loss on LE is not a loss I'm okay with taking, and the loss on ZW is the same thing. I'm not okay with taking that loss because it could have been contained or completely avoided with just more knowledge and more experience, which hopefully now I have. So these are kind of like the past 3 years where I've traded with a significant amount. I've been trading since 2019 with over 100K, but the significant amount of money just came after 2023. Now, what is my key for improvement, or my keys for improvement? So it's 2 things. I need to keep position size relatively small so I can roll or adjust in different ways. And by small, I mean I can be collecting up to 8% of the account in credit for a strangle, or up to 5% for a directional trade. So it's usually short puts. And I will be using no more than 30% of my account in margin requirements per position, and even less for directional trades, because the margin can really expand there. And again, this is kind of a thing everyone probably talked about. You have to keep position size small, so on and so forth. But this is really what makes or breaks a trader. And obviously being proactive. If things go against you, you have to do something. You cannot just keep watching it. So for me, if my strangle gets to negative 50%, I'm gonna do something. I will either close the position, I would roll the position. I would have to do something. Can I just sit there and do nothing? That doesn't matter what I think might or might not happen. Minus 50%, it means something pretty crazy happened, and I will have to react to it in one way or another. For directional trades, when I get to minus 100% of credit, again, I will have to do something. I will either close the position, or I will roll it out in time and down even more if I sell short puts. And this is also another key. You have to keep your margin intact. If margin goes up from like 30 to 40% or 40% and more on a position, I will be buying cheap calls or puts, or both, depending on the position, with less DTE than the position is, to lower my margin by at least half, right? So you have to keep those metrics in place. If you can do that, you'll have a pretty good successful career as a trader. Now, the second thing is, I think it's even more important than the first point, is you have to understanding and heavily researching fundamentals before entering a trade. And I should add also, while you're in a trade, you should keep following the fundamentals and see if they've changed drastically or not, to make any decisions. So you just need to be playing out different scenarios and worst cases. So what it means is basically, if I know currently I'm here, let's see, I'm in a position on crude oil, and I opened the position on Tuesday, September 9th, which was actually the evening of Monday. I opened a short put at strike 52. So if you look at the fundamentals, you can see that there's a lot of risk in terms of the Middle East, the geopolitical developments, Russia and Ukraine. Russia has been attacking, or Ukraine has been attacking Russian oil refineries, so on and so forth. So, and I know there's weekly inventory reports on Wednesday, 10:30 a.m. on Eastern time for crude oil. And you can see China has been buying a lot of oil, so they might have an oversupply, might not. And you have to take everything into account. And you can just look at the news just over here. This is where I look at all the news. And then obviously I go to whatever ChatGPT, to whatever AI, and I do a bit more research. Then I do my own research. Because you have to know what you're getting into. You have to know what's going on. What's the sentiment about crude oil currently, at least, right? And based on that, you can make a decision. Now, this can change as the trade goes on, and it will change pretty much every single time. So you have to keep doing it, every few days, or if there's a big price movement, you have to do this. If there's nothing, then I guess it's not that crazy, but you still kind of want to follow the news. But this is the other key, which is super important, because a lot of people just trade mechanically, which I guess works for some people. I don't see how it will work long term, because you have to understand what you're trading, the product, what's going on, what are the fundamentals, the supply and demand balances. It's really, really important. I'll give you another example. Let's see here. So copper had a massive update today, and because for the past few days, there's been a major closure in one of the major copper mines in the world, and nobody knew how severe this closure might be. Is it going to be something they resolve quickly, and then the supply chain basically will go untouched, or it's something way more serious, right? So this is something that obviously nobody knows nobody knows what's going to happen, but there is a possibility where it will be really problematic for the supply, right? And if that's the case, then we don't want to have any exposure to the upside. If supply goes down, the demand stays the same, and price can just kind of shoot up, which is what happened. So copper jumps after Freeport declares forces at the mine. Let me see here. Stroking concerns over global supplies. So, these are the things you have to research and be on top of. And if you're not, then you will have no success in this business long term. You might have a good year, maybe 2 years, but you'll end up losing big time at some point. It's really important, specifically with commodities. Stocks are different, indices are different, but this is something that you have to be on top of. So this is it for this video. Hopefully it was useful. And again, if you have any questions, let me know. You can email me if you want to trade with me or join my private Discord. It's completely free. I just don't really let just anybody in. And really important for me that this community is pretty premium. And again, if you also want to trade with me, let me know. You can email me with my email address in the description below, and hopefully gain some experience through my experience. Thank you again, and I will catch you in the next one.